Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the January 29th. That's right, it's the end of the month, but it is the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss to us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But really, much more important than that, and that's it during this next 60 minutes, this hour, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. You can always go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. All the indices trading to the downside. You've got about 2%. Or more. The least percentage move to the downside is Russell 2000. So we'll call that the strongest. It's down 28 points, trading out at 2077. Spot volatility is up 19%, up $5.85, trading out at 36.06. Gold's up $11, 18.49. Silver 97 cents at 26.89. Light sweet crude is off 11 pennies. Natural gas is up a dime, 4%. So that's a big move out there. And as we know, that is the forgot the system shut down yesterday. Let's get the correct contract. It still may be up a dime. I'm not sure, but let's get the correct contract out here. March. No, it's not. See, there we go. So it's off a nickel. Yeah, I thought that looked about right. Okay, sorry about that. And the 30-year Treasury is off 13 ticks, trading out at 169.05. So let's do this here. There's really only one question that's coming, but let's take a look at the general markets. Then we'll come back to questions. We can always go back to the general market. So what are they doing? What are they not doing out here? First, let's take a look at short term. Let's go to short-term time frame. Let's do it. That's the way we want to do it. I'll just bring over the short-term time frame chart. We'll look at the ES and the NQ. We'll just simply start with those. In the case of the ES, here's what we know. We know that price is moving lower, doing less relative energy. If we see some type of bullish reversal candle, that's going to signal that there's going to be a rally. That rally first would take price up to the oscillator and change line. That's right now is measuring out at about the 37.27-ish type area. I am not saying a rally is going to take place. Now, we don't have the signal. Well, we don't have the confirmation. What we've got is a signal of a stretched market, but you need to have that bullish reversal candle out there. So just pay attention over the course of the next couple of hours. If you don't get one, price should or could continue to head lower. We'll go take a look at those price target areas. I'll pull over the NQ. You'll see that it is doing the same thing. It's just triggered a Rhodes momentum indicator signal, but it has not generated that bullish reversal candle. It could certainly during this half hour by 1:30, and if it does, that would first be an indication of price moving up to the 12,983. Above 12,983, we would say it'd make another run for the 13,160 level. That's its TD9 breakdown area. That's where price got to this morning. It was up there at 9 o'clock. It tried once again at 10:30, tried again at 11. You can't bust them to the upside. What's it going to try to do? Bust them to the downside. It has busted to the downside and done so. But it's done so generating on the short-term time frame, the 30-minute, a Rhodes momentum indicator signal out there. Now, what we're going to do here is we're going to move away from these charts. We're going to go out to our first caller, and that is Scott in Colorado Springs, who wants to discuss the ES Mini. So, Scott, thanks for calling. Thanks for holding. How are you?
Good. How are you, Steve?
Very good. Thanks for asking. And what is it about the ES that I can help you with?
We have a weekly 9-count top. And we closed above it last week.
Yep.
How do you handle that? I know a lot of times you deal with resistance and support and you wait for 2 candles. Is that how you handle this situation also?
So give me a second here to I'm going to answer your question. First, I'm just trying to get the chart up on the screen. I'll put the continuous contract for this one just simply so we'll have a ton of data out here. And then we'll put up the chart and then we'll answer your question specifically because it's a very good question. And so let's put this chart up, and what Scott's looking at is he is looking at this TD9 count that formed. So you may have, you look at the ES Mini, right?
Correct.
Okay, so the ES Mini formed its TD9 count top the week of January 8th. Is that what you had?
Yeah.
Okay, and then yes, last week was a slight close above it. For me, that just negates that pattern. Period.
Oh, it does. Okay.
Yeah, it negates the TD9 count top out there. What that says to me is that wasn't the topping signal. Now, we've got a bearish engulfing candle this week and prices below the oscillator and change line. So that says,
right.
Okay, we can pull back even further. And so to answer the question, where would that pull back even further be to before it would give you an intermediate term change in trend? That would be the bottom of its weekly profile. And the bottom of the weekly profile for the ES Mini is 36.22. Now, there's one caveat to this, Scott. I don't suspect that this will change, but this is a new profile that has formed this week, and it could always change by the end of today. So I won't have complete confirmation on that until Sunday night. Odds favor that this profile sticks and holds. And so a downside target would be 36.22. But with regard to the question that you asked, I don't know how you thought I might answer that, but when I say it negated it, were you looking to say, okay, it was only 1 bar close above it, and so now you're back below it, and we're back in business with regard to the TD9s, and that says we're going to head lower? Was that kind of the thought process there?
Yeah, it was. I was just wondering how you handled that situation.
So I handle right now how I'm handling it until we see price close below the bottom of a weekly profile is that this is not some type of major move to the downside, and that we'll be back to the upside again. Now, so you ask a great question, and I really appreciate you doing that, and thanks for studying these tools and applying these tools. What I want to do here is, and this just to bring things in perspective, make sure that we always have perspective out here. And that perspective is, as soon as I get the slide up on my screen, right from this slide right here, is that actually the markets are behaving the way they should. In other words, seasonally, we get a top in January. Usually it's around January 6th. I believe this year, and this is the Dow, it took place on the 20th. Okay, it's within the range. Guess what also happens? Prices move lower into the end of January. That's where we're at right now. We should be anticipating some type of bottom inside of the Dow between now and, let's say, maybe it's next week or so out there. But the markets are just following along with the seasonal cycle. Scott, stay tuned if you would through this breakout here. I want to come back to you, make sure I've answered all of your questions. This is Steve Rhodes with Scott in Colorado Springs. We'll be back in just a few.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're online with Scott in Colorado Springs. We're taking a look at the ES Mini. And so downside price targets again inside the ES Mini, Scott, 36.22. That's the bottom of its weekly profile. And then 35.69, which is the breakout level, last breakout level, the TD9 breakout level for the ES for its March contract out there. So those are areas to be paying attention to. And let us not forget that we're in the seasonal cycle where the market is supposed to pull back into the end of January. We don't use these dates as date specific, but what people should be looking for is that this does not appear to be the start of some big move like we saw back last March out there. At least that's the signals that I see from the charts.
Okay. Easy enough. I appreciate you and all your tools.
Well, thank you. I appreciate you, and I appreciate you listening. And have a great weekend. Thanks for calling.
Thank you. You too, Steve.
You bet. That was Scott in Colorado Springs. Let's take a look at a couple of other things out here. So we've got the market profiles. You can see these on your screens out here. By the way, let's continue. Let's take a look at the NQ. Well, let's look at the Russell 2000. So remember we said the Russell 2000 is the strongest of these, and the Russell 2000 has made its way down to the bottom of its daily profile. So 2061 is the number, and what that means is the Russell 2000 hasn't even generated a change in trend signal for its daily time frame. And so that should make you say, something to think about. Now, I'm not saying that price can't close below 2061. It absolutely can. But just take a look at where we're at 1:20 in the afternoon. That has not occurred just yet. Okay, what else do we want to watch and observe? Well, we mentioned the spot volatility index, and we take a look at the spot volatility index. This is a beautiful slide because we're at 3751 on the spot volatility index. Yet, if you take a look at all of the forward futures contracts, that takes us from February out to October. It looks like I have a misspelling there, but October of this year. And you will see that the spot volatility index is trading above all of those forward futures contracts. This is a dislocation. This is a short-term dislocation in the market out here. Now, typically, if you look at the very bottom panel of my screen out here, and you guys can do this too, This is no magic out here. All I'm looking at is the only magic that I have out here is I use a threshold level of 1. And that 1 isn't taking a look at what the 3 month, the 6 month, or the 1 year spot volatility index ratio is out here. And when it gets above 1, which is where we're at right now, and I'm looking just at the 3 month, that's just simply dividing the spot volatility index by its 3 month counterpart out here, it gets above that 1 area. And bottoms in the market typically form when that gets back below the 1 level. So again, another tool, the spot volatility, a great tool out there. You and I, you never hear me talk about it as fear and greed. There's no fear, there's no greed. You know why? Because none of us can trade that. Instead, let's look for important signals, right? Important signals like this, important signals such as a 1-day rate of change greater than plus 10%. We saw that a couple of days ago, and then we saw yesterday's bounce out here. The same type of situation could be setting up for Sunday/Monday out there. It could just be a counter trend rally, but what I don't want you to do is see some bad close and then just hop on it saying, finally, I'm on the short trend, because what you're going to likely be on is the wrong side of the train, at least from an intraday standpoint out there. So watch that spot volatility. Again, you can do all this at home. Look at those 1-day rates of change greater than 10%, note them on the S&P, and then see what you really should do is do it with the ES Mini, because you're going to see that bounce take place at least in the overnight or early morning time period out there. And what you'd be looking for to confirm that, and so this may not happen today, may not happen until Sunday, what you're looking for is a Rhodes momentum indicator signal, much like inside the NQ, which we were looking at earlier. You'd be looking for it in the ES, the NQ, the Dow, the Russell, and that would be where price is moving lower, doing less relative energy. You get that bullish reversal candle, and then boom, you're off to the races. Now, the first part of the race would be the oscillator and change line, or perhaps a TAS market profile level. And then once it can clear those areas, then it gets back to its TD9 breakdown area out there. So watch that spot volatility. It's going to be a real key to be observing and to assist you with regard to what the market's intentions are, especially come Sunday evening, Monday morning kind of a thing out there. The New York Stock Exchange, what you'll want to watch at the end of the day is where does that advanced decline oscillator reading fall. Now, right now, the print is minus 211. Once you get to minus 150 out here, what you get into from the New York Stock Exchange standpoint is an oversold level. So we got to that oversold level a couple of days ago. We saw that big bounce yesterday. That also coincided with the 1-day rate of change greater than plus 10%. So we're still in that same area. But what you're going to want to really watch for at the end of the day today is where does the New York Stock Exchange close? Does it close below? I'll give you the exact number here. Does it close below 14,487.73? And if it does close below that, does the advanced decline oscillator line, does it close below minus 198.45? Did you get those numbers? Write them down. Minus 198.45 and 14,487.73. If price closes lower, but the advanced decline oscillator line closes above minus 198.45, that'll set up a divergence. Why is that divergence important? If you take a look at my chart here, you'll see other divergence patterns. And when they set up, they lead to a bounce or a bottom. So I'm just trying to prepare you for what's going on now, what to be anticipating as we come into the weekend. Again, this may not begin to take place until sometime on Sunday, but it should set up to be a very good trade. Why should it set up to be a very good trade? Again, come back to the spot volatility index, which is totally gotten out of whack here, and that is just simply based upon taking a look at the futures contracts and prices trading above all of them. And that is all you need to know. No, just kidding. You need to know more than that. But let's go take a look at, let me get over to a different worksheet out here, workspace for me, just so I can get to some other charts. And let's go take a look at some other instruments. And then we'll go ahead and get to some questions that are out there. There's a question about U.S. Steel. We'll take a look at that. There's a question about ticker symbol DDS. So we want to get, yeah, let's do that because we just have about a minute left here. So what was I going to do now? Wow, I forgot. That's that quickly. Okay, so forget that. Let's just simply go take a look at U.S. Steel. And X is the ticker symbol out here. See what it's doing today. See what patterns it has. So right now it's just trading. There's a brand new profile that formed today. Beautiful. The bottom of the profile is 1798. The low today is 1796. The top of the profile is 2004. Today's high, 2035. You think that maybe U.S. Steel is just consolidating between support and resistance, S&P? I do. And so now you know where support and resistance is at. You break either one of those, that's going to give you a feel for where price is headed to. Okay, so that's good. We got that out of the way. If we take a look at the daily time frame, my other daily time frame chart out here, we're going to see is a nice TD9 count bottom that formed a couple of days ago. So it's got a nice bottoming signal out here. If price could ever clear 2045 S&P, that would suggest a move up to 2349. So you need to see, if you're long, you need to see it close above 2045. It's got a nice bottom in there. You're with inside a profile that's got support. You're really not out of the woods until you clear that oscillator unchanged line. If you were long this, your stop needs to be below, or should be below, that low from January 27th, 1695. Steve Rhodes with TFNN. We'll be right back. We'll take a look at DDS. We'll take a look at TGB as soon as we return. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. By the way, that we just finished the 130 bar, and we've got a nice bullish piercing candle that's out there. So we take a look at the 30-minute chart for the NQ. That's confirming a Rhodes Momentum Indicator bottom. You can't get liftoff until price, the real confirmation comes with a close above the oscillator and change line. That becomes the target. That's in that 12,983 area out there. But you've got the first indication that the buyers or the bulls are going to take an attempt to form a bottom out there this afternoon, at least inside the NQ. Now let's go take a look at a couple of requests that have come in. One from Leonardo DiCaprio, literally. And Leonardo, he's a watcher of the show. He says, hey, Steve, where do you see an entry levels for DDS? You've got three symbols out here. We'll take DDS, and then we'll go to other questions, and we'll try to come back to those out here. So your question, given the increased volatility in certain stocks at present, do you recommend any particular percentage drawdown as a stop loss for any one individual trade? I'm not referring to how much one's account. Numbers more than 1% on the trade. No, so it's just that 1% and just making sure that 1% assumes that you have a one cancels other out there, if you will. So you've got your stop in place. And as long as you've done the proper position sizing, you just got to let it roll. But with regard to DDS and what the charts show us right now, you do have a brand new profile, which means you have this profile formed above the prior profile on a daily basis. So that's a little bit of a bullish signal. Nonetheless, doesn't mean price can't pull back to support. Support here would be 72.28. Resistance is at 103 and a quarter. Price is above the weekly and the monthly profiles. And this is Dillard's. DDS is a ticker symbol. So let's go take a look at its other signals. Well, a couple of days ago, this generated both a TD9 count top and a Rhodes momentum indicator top. Now, whenever you get a topping pattern, all that it really gives sellers the ability to do is push price back to support. Well, the first level of support is the oscillator and change line. That was tested and held yesterday. And as long as price remains above 84.83, that says price should go, Leonardo, go tag the top of that profile at 103 and a quarter. If it closed below 84.82, that's the oscillator and change line. That says I go tag 72.28. If you close below 72.28, 59.33 comes into play. That is the TD9 breakout level. So you've got a valid top, and you've got support that is held. On a daily time frame, the signal is neutral, but you know where support and resistance is at. Take a look at the weekly time frame. This is going to form bar number, a TD9 count top this week. And that says that if you ever see price closing above the high this week, what is the high this week? That is A128, even Steven. Then that's going to tell you about a strong momentum move to the upside. But you've got a topping pattern on the weekly, got a topping pattern on the daily. Support hasn't been broken. And on the monthly time frame chart out here, what we have is price got back to its TD9 breakdown level, 117.91. So I would say more likely than not, Leonardo, this is going to consolidate, or if this was just a trade, because this is a brick and mortar business, you tried to ride it as much as you could, then now would probably be a good time to get out based upon the weekly, the daily, the monthly signals that are out here. But again, on a daily basis, its levels of support have not been busted. So you've got to do what is right for you, and I hope that helps you out. And I'll try to get to those other requests that you had out there as well, and have a great weekend. The next request coming in from someone inside the den. I got to get another one fired up here. I believe inside the den. Want to take a look at TGB is the ticker symbol. And my apology, I don't recall who requested it. It doesn't matter. This is Taseko Mines. And Taseko Mines also formed a brand new profile today. So we're 3 of 3 out here. And the brand new profile provides you with support at 117, resistance at 136. On a weekly basis, it's not a new profile, but support is 114, was been tested and rejected this week, resistance 147. And on a monthly basis, price is going to close above the top of its profile, which is 112. You're at 122 right now. I assume it'll close above the top of its profile. Let's pull over the other charts here for Taseko Mines, TGB, and what do we know here? So what we know here is simply that price made its way back to its breakout area. It didn't get right down to it, got close. 102 is the breakout level, and it's bounced off of that and it's found resistance at the oscillator and change line at $132. So, and I don't have a bottoming pattern. Well, I take that back. This formed an A to B equals CD to the downside. It had it. So this formed a Gartley buy pattern. I don't have the A to B equals CD tool on this version of the software, but I can clearly see it. I think you can see it as well. The reason why I say it formed is because yesterday was a gap to the upside, a rising window. That's your bullish reversal candle. If you're long this, you really need to see price get above really but the top of that daily profile, that new profile at $136 out there. You don't want to see it close below $102. If you do that, then it says 82 cents. That's what the daily says. Weekly has wave number 7, letter G, Rhodes momentum indicator top, but price is held at 114. You don't want to see it close below that. There's nothing else that I've got here for TGB. So I hope that helps you out with regard to somebody. I don't recall what the question was, though. Let me see if I can find it. Just thoughts on it. So those are the thoughts, Mike, with regard to what it's doing. I hope that helps you out. And thanks for the request. And have a great, just looking for a buy. You know, you're looking for a buy. Taseko Mines. Is Taseko gold, silver, copper? What? I don't recall what they are. Are they in Russia? Something like that? I'm fundamentally, Mike, I don't recall where they're at out here. It's a copper stock. Okay, thank you. So Dr. Copper, so I want to just, we should do this thoroughly, Mike, because we should, I would imagine that this is going to trade in relationship to what copper is doing out here. So let's just simply go take a look at copper for you. And HGO3, I want to get it fired up on one of my other screens as well. So here, my recollection is that copper on its daily time frame, Mike, formed a Rhodes Momentum Indicator top, and that has brought price right back down to support. And support is between 352 and really where it's trading right now at 355. That's the bottom of its bullish structured profile. You can see a nice rising trend line out here. So this is held. And that being said, since it's copper, stay with the position if you're just looking at it. Maybe you're not in. If you combine this with copper and you're looking for a place to get in, then right now that would say here's where you would get in. You know what I mean? What we don't have in copper, we have price coming back to support. But what we don't have is some kind of bottom signal. Now, here's copper on the daily time frame. You can see the Rhodes Momentum Indicator signal, but really just a sideways consolidation move. So there's nothing really wrong with it. You're back towards the bottom of the consolidation, again, with regard to copper, in its testing of support out here. So that's about all that I can provide to you to assist you with that. But copper hasn't broken down. If it did break down, then we'd have to look for some type of bottom there, Mike, to then coordinate or correlate to what you might want to do inside of TGB. So I hope that helps you out, and thanks so much for the request. Kay wants to take a look at, takes a bite out of the apple. As I recall, Kay was short Apple, and let's go see what her question is. Looking for a good place to cover your short. You're thinking 128 would do the trick. So if we take a look at its profile, it's unique here. So first, I like your 128. I would say 128.75 more than 128, and that's only because I've got the cheat sheet, okay? The cheat sheet is, you're looking at the daily time frame for Apple, you're not going to see a center of the box. Well, you are. It just happens to be at the very bottom of the box at 128.75. And price has rejected the top of that profile, 130.57. We're going to take a look at Apple in detail for K as soon as we get back from this break.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at the chart for Apple out here. And as we take a look at its daily time frame chart, what I don't see is one of the topping patterns that I use to be able to identify tops and bottoms. They're not always present at every top or at every bottom, but we don't have one here. Always makes me suspect. And Kay's asking the question, where's a good place to cover? So your first levels of support have been tested and they have held. That is 128.75 and 130.57 on the daily time frame. If price could close below 128.75, then you'd be looking at 123.45. But support so far has held. That's just on the daily time frame. What I want to do here, Kay, for you is just shift over to the short-term time frame. In other words, if a bottom is formed, my theory is, and it's a pretty good theory, is that we start to see the turns take place on the shorter-term time frames. So it's especially important as a price pulls back to support, trades up into resistance. What's going on the shorter-term time frames out here? So let's begin that process. Let's start here. I only have 3 of those short-term time frames right now on this set of tools here that I've got, but that's good enough. Here's the 30-minute time frame. And on a 30-minute time frame, we can see a Rhodes momentum indicator bottom is attempting to form out there. On a 60-minute time frame, you've got A to B equals CD pattern that has completed. It completed with the hammer candle during that last 2-hour session. I believe that would have been 1 o'clock, if I'm not mistaken. And you're getting some additional moves to the upside there. So this is, again, on a hourly basis, the oscillator and change line went from green to red. At a minimum, K, I want you to prepare for a bounce inside of Apple. That bounce on the hourly time frame says it's targeting 136.59. On the 2-hour time frame chart out here, you've got a TD9 count, a potential TD9 count bottom. It looks like you'll get that. Price would need to close above 138.31, and you're at 132 to negate that pattern. So it looks like you're going to get a TD9 count bottom. There's an A to B equals CD. This is a bullish reversal candle at this stage here. So short term is saying you may have gotten everything you needed out since you had 128 picked out, and we can see the top of the profiles that you may not have had access to. That's what I'm seeing on the short term and on the daily time frame. So I really hope that helps you out, and best regards out there. We had a request inside the Tiger's Den from a new denner, I believe. I haven't seen the name, so welcome to the den. It's a private message, so won't reveal the name here. And that is, the question is, I think the small caps like the Russell 2000 would be leading the way down with higher minimum wages and energy jobs on the executive order chopping block, but not so. What do you see in the technical analysis tea leaves? So with regard to the Russell 2000, much like here in the case of Apple, what we know is that price pulled back and tested support earlier in the day. What's that level of support? This is not my level of support. This is its level of support. This isn't some number Stevie's pulling out of his arse. This is a number on the screen. This is a number you can rely upon. 2061.55 to be exact. What's the low today? 2060.50. So price has pulled back. It's tested support. If it can't break through support, it could just be suggesting the beginning of a consolidation. And that consolidation pattern inside the Russell headed between 2061 and 2192. And we're just really looking at profiles. Top of the weekly, bottom of the daily. If we go to, let me get this going out here. RTY. Excuse me. I want to get that going. So that's the very first thing that we see out here. Let's see if we can get these charts here populated. Let's pull this over now. And so we know what's going on in the daily time frame. Let's go take a look at what's going on in the short-term time frame. We should really do the same thing that we did with K and Apple, and now do it with the Russell 2000. So here we've got the 30-minute time frame. Let's go ahead and populate it. Let this thing get populated. And what price has done here, and this is where I use a Scott's question about the 2-bar rule. And Scott, that's good. I'm glad that this pops up on the screen because I can state something that I didn't discuss with you. So the 2-bar rule that I use is a break of support or a break of resistance out here. I don't use a 2-bar rule with regard to topping patterns or bottoming patterns out there. You negate those, you negate them, and you move on. Here we can see that the Russell 2000 today so far, and its pullback has been nothing more than a test of the breakout area, 2073.90. We've only seen one close below that, and then we're back above it. So at the end of, so watch this during the day. If you see two 30-minute bar close below 2073.90, well, then we don't really have it. And there's not a bottoming signal that we have out here other than price coming back to support. So on a 30-minute basis, you had price coming back to support. On a daily basis, you had price coming back to support. On an hourly basis, I don't know what we have, but let's go find out. You've got a Rhodes Momentum Indicator bottom, as well as price coming back to its TD9 breakout support at 2063. Interesting. So it is definitely attempting to form a bottom, much like the NQ. It's taking its P's and Q's from the NQ. And on the 2-hour time frame chart, just has Rhodes Momentum Indicator pattern that has been triggered, but nothing more than that. On the weekly chart out here, the weekly is going to confirm a TD9 count. And that says, hey, price may pull back to its support level, its initial support level at about the 2032-ish type area out there. But you do have a topping signal there. On the monthly basis, not enough data, I don't think. Yeah, I don't have enough data really to, but it doesn't look like we've got a topping signal on a monthly time frame. So you're asking what the charts show, and what those charts show at this stage of the game is price came back and held support, 2061. You or I, we don't know whether or not price will hold this level, but if it doesn't hold this level, you and I also know where price would target. And price would target its breakout level, and that's at 1932.90. So I hope that helps you out with regard to the Russell 2000, what it is signaling to both you and I. We've got a request to take a look at light sweet crude, so we can absolutely do that. We are trading the March contract out here. The light sweet crude is just consolidating, Lorna. Let's go take a look at it. And that consolidation, here we'll just take a look. So now we're looking at the forward futures contract. So what you'll see, we've got we have March, April, May, and June. Those are the charts along the bottom. What you'll notice here, Lorna, in each of them is price is doing the exact same thing. It is consolidating with inside its daily profile. Now, is this a consolidation? Is this distribution to head to the downside? Or is this just consolidation to head to the upside? The question that came in that I wrote earlier about the Russell 2000, you'd expect it to go lower because of potentially higher minimum wages and energy jobs and so forth. Someone might say, yeah, that's going to go ahead and kill light sweet crude, right? But is that what we see on the charts? The answer is no. Why don't we see it on the charts? Who's smarter, the charts or our thinking? I'm going with the charts. At least with regard, I should say it with regard to the charts or my thinking. So I'm not speaking about your thinking, just my thinking. And I'm going to go with the charts. What are the charts telling us? The charts are telling us we're not going to anything mean and green anytime soon. And I think the charts are saying there's kind of like a chess game, right? The charts are saying, I'll tell you what, I'll go ahead and bait you. Go ahead and try that. Look. At this stage here, what we know is they killed the Keystone Pipeline, right? What is that going to do to the price of oil? Is it going to make it less expensive or more expensive for us to get? We still need the same amount of oil today. It's going to make it more expensive. So my take at this stage here is this just consolidating in order to be able to move higher. not lower. But we're going to have to let the charts prove it to us out there. And right now, you're just simply in nothing more than a good old-fashioned consolidation. What's that mean? That means you buy it at 51.73 and you sell it at 53.94 until the pattern changes. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, folks, this is going to be a quick one. 4 questions in the next 2 minutes out here. Brent writes in, he asks of the major indices, is there one setup that's maybe better than another for a bounce out here? Brent, and just take a look at profiles out here. The only of the 4 that have not broken through the bottom of the daily profile is the Russell 2000. And so I would just simply have to say that would be the one that I would be taking a look at out there based upon just simply and solely that. There's a question that comes in if we could take a look at JNJ. So I'm just going to pull up the charts. I haven't read through the questions. I just want to be able to get through the stock charts and at least communicate to you what they're communicating to us on a daily basis. Johnson & Johnson forms a TD9 count top. It does it 4 days ago. Prices pulled back. It's pulling back into support. And that support area is its profiles, which is between 158 and 162. 158.23, 162.66. The breakout level at 159.11. So price is pulling back into a level of support as we speak right now. Hope that helps you out with regard to the daily time frame. Let's take a look at Microsoft. This one here is for Eddie, I believe. We've already covered Apple. If we take a look at Microsoft, Microsoft is going to form a TD9 count pattern today. It's bar number 8. That made the high. But as we take a look at Microsoft, looks like it may just pull back to about 228.80. It hasn't broken through a key level of support, so nothing broken there. Everything seems to be okay. Let's quickly go take a look at Nordic American Tankers. Let's change this over to the daily time frame. And on the daily time frame out here, what is Nordic American Tankers doing? It's just trading with inside its daily profile. It's bullish in structure. That means you don't want to see it close below 204. Resistance is at 239. So, that's the weekly chart, son of a gun. Let me get to the daily chart out here. Oh, the daily chart. There we go. Nordic American Tankers has a Rhodes momentum indicator bottom pattern. Price ran into resistance at 304. It's got a solid bottom. If it can close above 304, whether it's today or Monday, price should head up to 339. But you've got a nice bottom on the daily time frame. Folks, stay tuned for 2 more great hours. Your favorite polar bear's up next. Obi-Wan Kenobi to take us on home. I'll be back with you on Marvelous Magnificent Monday. Have a fabulous weekend. Stay safe out there. We'll see you soon.